are you able to hear me?
Yeah.
Are you able to hear me?
Yes, Susan.
Yes, thank you. There was a glitch, so I had to log off and log in again. Susan Namaganda is my name. I want to welcome each and every single one of you this morning to our webinar, the Uganda Securities Exchange webinar. We are grateful to each and every single one of you for coming. The USC Academy, you'll be hearing about it at the tail end of this very important discussion. People have been asking to know what are bonds, how do we invest. They have been hearing things in the public sphere, but then they have not heard them from an authoritative voice, one that already does practice this very work. And so we are glad to be able to come and educate you this morning. So this is an educational forum. Your mics are mute and they are for a reason. At the tail end, we will all have an opportunity to be able to ask a question. We will be unmuted and we'll be able to ask a question. So without delaying any further, because we wish to also conclude this particular session at the top of the hour, I'll go straight into prayer and then we can get started. Yeah. Loving Father, I want to thank you for this morning. I want to thank you for each and every single person that you've been able to draw to this particular webinar, Lord King of Glory. We thank you that, Lord Jesus, that your wisdom is abundant and that there are new things that you want us to learn. We ask the Lord King of Glory that everything that we will learn, Lord Jesus, today, that none shall forget, Lord King of Glory, and shall put it into practice. In the mighty name of Jesus, we have prayed. Amen. So welcome, everyone. Once again, so to start off our session, before we get into our panelists and the things that they will be talking about, we want to first of all, play a little game, and I'm sure it's a game that we are all going to love. I'm going to drop a link right now in the chat section. For those that are using their phones, can use a link. For those that are using their computer, can be able to scan a QR code. And so I'm going to share right now shortly. I'm going to share shortly right now, and you're able to see. Are you all able to see on your screen right now? Are you able to see something on your screen? Can someone confirm? They're able to see. So everyone scan for those ones that have QR codes. For those that can scan that are using their computers to listen in. For those that are using their phones, please do come through and use your use the link that we have put in the section. So the first question is, what comes to mind when you hear about investing? Someone says making money. Another person is saying savings, interest, returns. Yeah, keep those responses coming. About 14 of you have responded. We are 64. If we can reach 20 responses, it will be good. 15, yes. Someone is saying growing money. Another person is saying shares. Another person is saying stocks. Yeah. Another person is saying returns. Returns is really coming out more strongly. Another person is saying making money. Making money is really taking the day. Yeah. So about 22 of us have responded. So let's go to the next question. Have you ever invested in any financial product before? That means, have you invested in shares or in bonds? For some of us, Ugandans are even really aggressive. We also want to go across the border. There are some people who have said that they want to invest in things like Bitcoin and NVIDIA and have been able to invest overseas. So I'm seeing 14 of us already, 15 have invested in a financial product before. 3 of us have not, by the way, which is okay. This is a good starting point for you. We are here to really educate you and so that you can be able to start your investment journey. 16, yes. So that's a good response from all of us here. And then, do you know about treasury bonds? For us that are here, it's a yes or no. Do you know about treasury bonds? Yes. Yeah. So some people have heard about them. Yes, it's good to know. Yes, keep those responses coming. They really are going to be helpful, especially for our panelists as they address certain things this morning. So actually, very many of us have heard about bonds, so it's very good. Yeah. And then who issues treasury bonds in Uganda? Who issues treasury bonds in Uganda? Uh-huh. 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 Yeah, I'm seeing Uganda Revenue Authority. Some people are saying Ministry of Finance. The majority of us are saying Bank of Uganda. Mm-hmm. No one is saying a commercial bank. Yes, so indeed, yes. So the person that actually issues treasury bonds in Uganda is the Ministry of Finance. The Bank of Uganda is an agent to the Ministry of Finance. So we thank God that today we are going to correct that. Most of us, yes, Bank of Uganda is really running the front of house because they are the banker to the government and they have been given the mandate. But the actual person that issues is the Ministry of Finance. Yeah, so that's something new that I believe all of us have learned today. So how can you invest in bonds? There are options on your screen. How can you invest in bonds? Hey, you wake up one morning. How often can you invest in bonds? So some people are saying 3 months. Yeah. How often can one invest in bonds? 3 months is really coming up as an answer. How often? 2 weeks. Some people are saying once a month. Yeah, there is someone who's saying, I do not know. Someone has said not limited. Someone is saying daily, anytime, often, 2 weeks, daily, 3 months. No idea. That's really nice. At every auction, yeah, every month. Those are the answers that are coming up. Oh, thank you so much for responding to those questions, and we shall definitely be responding to all those questions that you have. What is the minimum investment in treasury bills and bonds? So some people are saying 100,000. Yes, and 100,000 is coming out strongly. Another one? 100,000 again, the minimum. No, someone is saying no clue. That person is saying 1 million Uganda shillings. Someone is saying 300K. Yeah? Okay. Then someone is saying only if you have money. Only if you have money. Really, really thank God for these responses that are coming through. It really paints a picture for our panelists. Yeah. So someone is also saying when I am rich. Yeah, when I'm rich is the minimum that I can put up for investment. Okay. Yeah. So where do I buy treasury bills and bonds? Today you are here. Where do you know that we can be able to buy treasury bills and bonds? Is it at our local supermarket? Is it at the bank, through the exchange? Yeah, the bank, yes. The majority of the answers are at the bank. Through the exchange, we have about 4 respondents, about now 6 respondents, passing 6 through the exchange and 12 at the bank. No one is choosing the local supermarket. At least that is good. At least we are all now aware that, yeah, we can't go to the supermarket. We have not seen something like that. Yeah, so the bank is 13 again, 7 for through the exchange. Yeah, someone has put local supermarket. Okay. Yeah, thank you for those responses. So are treasury bills and bonds taxed? Someone is saying no. Another 7 are already saying yes. Yeah. Okay. 13 are also saying yes. Yeah, that treasury bills and bonds are taxed. Yeah. 5 are saying no, that they are not taxed. Yeah. Yeah. So that's good to get those responses. Treasury bills and bonds are taxed. Yeah. So we have finished our game, and then and that game has indeed helped our 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 panelists get to know exactly the questions that they will be dealing with and how they should be responding to you. We are thankful that we have over 93 of us already attending. Now we are 95, and I must assure you, you're not late for anything. You're just in time to get into the panel discussion. We started off with a game, and this game is just for us to know exactly where all of us are at, so that when we are responding, we know exactly. In this team, we have people that actually are knowledgeable about the market. We have people that do not know, have enough information about the market, and that's really, really good. And so thank you for participating. So for this morning, we have panelists that are coming in all the way from the different brokerage firms. I've had the pleasure of working with these three amazing women. I must tell you that the fixed income space at the Uganda Securities Exchange is run by women, so that's a very, very nice thing. These ladies have been at it for the past 6 years, so they have come with a wealth of experience. These are the people that you're going to work with on a day-to-day to ensure that your investments are being deployed, not just even for bonds, but even for the other securities that like shares, but really their docket is really majorly in fixed income, and that's what they have been growing. So first off, we have Penklin Twinamasiko, who is from Old Mutual Uganda. Then we also have Harriet Namazi coming from Dan Blair. Then we also have Melissa Kamoga from Crested Capital, and we are glad to have them. I'll quickly ask them to turn on their mics, and then briefly they'll talk about themselves and also the work they do at Crested Capital, at their brokerage firms, that is Crested Capital, Old Mutual, and Dan Blair, and then we shall get straight into the discussion. Just briefly, Melissa and Dagira, if you could open your mic and just speak to our people, say hello and let them know what Crested Capital is about and what you're doing there.
Okay. Good morning, everyone. Good morning. Am I heard? Can you hear me?
Yes, you are very audible. Melissa, we can hear you.
Yes, good morning once again. Thank you so much for joining in on this webinar. Thank you for all those. We see we're almost at 100 now. Those who have taken off their time to join us as we discuss Treasury bonds. As Susan has introduced us so lovingly, my name is Melissa Ndagire Kamoga. I work with Crested Capital. Crested Capital, we're investment advisors who deal in stock brokerage, that is shares on the Uganda Securities Exchange, as well as those that are cross-listed. And we do investment advisory as well as fixed income, which are the Treasury bills and bonds, and that is where I lie. So I am the team lead at Crested Capital for Treasury bills and bonds, which is Government Securities. So for all those, I'm sure those who are in here that are clients, I know we've interfaced. Pleasure to make your acquaintance, and we hope that we have an amazing session. Over to you, Susan.
Thank you so much, Melissa. Harriet, if you can unmute your mic and briefly greet us.
Hi, Susan. Thank you for this. Good morning, everyone. Thank you for joining this webinar. Once again, my name is Harriet Namazi, and I'm a treasury and equity dealer at Dan Blair Uganda Limited, where I support clients in buying and selling both shares, government bonds, and treasury bills. So Dan Blair is a licensed broker and a subsidiary of Dan Blair Investment Bank in Kenya. We offer a range of financial services to our clients, from brokerage, corporate finance, advisory, private wealth, and research. We are located at ground floor, Treasury House at Remember Avenue. Thank you.
Thank you so much, Harriet. Penklin Twinamasiko, you can unmute and greet us and tell us what it is at Old Mutual.
Thank you, Susan. Good morning, everyone on call. And thank you to the US Academy for arranging a webinar. Yes, so I'm Penklin Twinamasiko. I work as the Business Development Officer in charge of stock brokerage, where I oversee equities and fixed income dealing. Old Mutual Investment Group is part of the bigger Old Mutual. And in Uganda, we are licensed to do unit trust management, fund management, financial advisory, and the stock brokerage. Yes, it's a pleasure being here. Thank you.
Thank you so much, Penklin. So to start off our discussion, Melissa, for the people that are here, some of them already told us they do not know what treasury bonds are. There are things that they've been hearing on Twitter, TikTok. I mean, information has been out there, but they're saying for the very first time, we want to hear it from actually people that do it. And so they want, in the simplest of ways, could you explain to our attendees what are treasury bonds? Who are the issuers? What is the minimum? How can what has been the experience as you have seen the investors come on board and things like that? Melissa, over to you.
Very much, Susan. So if I'm to explain what a treasury bond is in the simplest of terms, I can maybe use an analogy. I can use a simple example. For example, just imagine you have a friend who needs some money. Maybe they need 1 million shillings. So your friend comes to you and says, please lend me 1 million shillings. I will pay you 150,000 for the next 5 years. Yeah. And then after those 5 years, I will return you 1 million shillings. That is how basically a bond works. So we just replace the friend with the government. The government basically wants to borrow from you some money for a period of time, during which that period they'll be giving you an interest amount regularly. And then at an agreed date, your money is fully returned to you. So who issues the bonds? The bonds are issued by the government of Uganda through Bank of Uganda. And they are issued at least once a month, depending. We've seen on during certain months which are longer than others, like January, we'll see maybe we'll have a bond or two. But usually these bonds are issued out once a month. So that means that you as an investor, you're able to lend to the government at least monthly, and monthly different bonds come in or different tenors. So you could find that maybe in the month of March, there's been bonds for the 2-year, 5-year, 15 and 25-year. So if those are not tenors or periods that you're interested in investing in, you could try the next month. So these bonds are issued for a particular period of time. They start from the 2-year mark all the way up to 25 years. So the 25-year bond is new on our market, or it's new and was recently introduced on last year's financial calendar. So that's the longest bond we have. So which means that if you as an investor want to test the waters, you can start with a short period of maybe 2 years. But if you are looking maybe to invest your money for your children or for your retirement, you have options of investing all the way up to 25 years. So in addition to putting your money away for this period, what the government does is you are paid a coupon, which we call interest, every 6 months. So for example, like I had mentioned, you have that friend, you're giving them 1 million, they are giving you 150,000 annually. So this 150,000 is essentially 75,000 every 6 months. So if you put that money away for say 25 years, you know exactly how much you would be earning or what you would be getting every 6 months from the government of Uganda when you invest in that bond. Thank you, Susan.
Thank you, Melissa. So, Melissa, in the event, for example, I missed yesterday's auction, Wednesday's auction yesterday, is it possible for me to be able to buy a bond today?
Yes, it's very possible to still be able to buy a bond. Recently, the Uganda Securities Exchange has made it possible for our clients to invest on the secondary market. The secondary market is the banks. So if you are unable to get it on the primary market through Bank of Uganda, through the Uganda Securities Exchange, we're able to purchase for you this bond through one of the primary dealer banks, which are maybe Stanbic, Centenary Bank, Stanchart, and the like. So yes, it is very possible that even if you missed it this week, you can still get it next week. You can still get it today. It doesn't mean that the primary auction is the only time that you're able to purchase a bond.
Okay, thank you so much, Melissa. Over to you, Harriet. So Harriet, you know, the Bank of Uganda, one time I was doing some digging into the history of the central bank and when it started this role. And currently, I think we're about 58 years since the government of Uganda started issuing bonds through the central bank. But yet, it's like it's like as if it's just been 2 years that now people are getting to know about bonds. And now it's like as if it's the next best thing to, if you don't have it, like it's like fear of missing out. And so you find that it's like as if people have not known, yet it has been there and it has been functional. Why is it that people were overlooking the investment in this particular sector and were opting for other investments like real estate, shares, maybe even a business? Why do you think that that is what was happening before?
Thank you, Susan. In my view, I feel bonds were previously overlooked mainly because of perception and limited understanding. First of all, before there was really limited how about government bonds and how clients can invest in government bonds. Many people didn't even understand how government bonds work. How can someone invest? How returns are being calculated? Or how even can this client benefit? And then also the hard terms like the yields, the pricing, really made bonds to be complicated to clients. And then also Ugandans, especially ordinary Ugandans, thought that they had to be billionaires for them to invest in government bonds, which is not true because with just 100,000, you can invest in a government bond. Many Ugandans didn't know that even in a government bond, you can earn some good interest like 18.5%, 17%, 16.25%, and so on. So this information wasn't easily accessed by investors, especially ordinary Ugandans. And then also, I feel bonds were also perceived to be less liquid. Some investors thought that if I buy a long-term bond, like a 25-year bond or a 20-year bond or a 15-year bond, they have to wait for maturity for them to get back their money. But this is not true because a client, if you buy a 25-year bond, you can still sell that bond on the way before maturity in the secondary market. And then also there is the issue of its visibility. Many investors I've interacted with preferred real estate because it's something they can touch and see. I can give an example. Back then, I remember I asked one of my clients, like between bonds and rental properties, which one could give them the quicker and easier returns. He told me, of course, bonds could be more efficient, but then he told me it chose to invest in real estate because of the pride and recognition that comes with owning physical property. Like the public could respect him so much that if someone knows that this rental house belongs to Susan, he would be respected much than just investing in government bonds. So he preferred seeing his investment physically, seeing his money physically. So that attracted him to invest in real estate more than bonds. So in my view, it wasn't that bonds were bad investments. It's just that they were less understood, less visible, and also seemed less rewarding at that time. But in real sense, bonds are really rewarding. You can get high interest like 18.5%, get semi-annual payments from these bonds. Thank you so much.
Yeah. Thank you so much, Harriet. And on the backdrop of what Harriet has just shared about people not knowing these things that, they were there, but people just didn't mind. First of all, people would think, I saw in the chat section, someone was thinking about it as a car bond, isn't it? So probably people are also thinking, are those bonds of cars or something? Eh? But then there is one of us that has made, in the market, we are people that are allowed to practice what we preach. So we are all given a mandate and an opportunity to be able to invest. And one of us has been able to invest, that is Penklin. And Penklin, just share with our guests this morning that what personally got you interested as Penklin, not as Penklin, the one who is an advisor, but Penklin as an investor. What really got you interested in investing in bonds? And of course, what is that one single most compelling reason? And if an everyday investor should consider right now as they invest in bonds? You have invested, what got you in it, and what is that one thing that you'd want everyone to go away with, that you know what, this is the reason why you should be able to invest in this particular sector? Over to you, Penklin.
Thank you, Susan. Quite a personal question. I hope my personal experience will be able to help one make an investment decision on what to invest in and when. So before making any investment, one will need to first consider the investment objective. What is it that they want to attain and in how long? So once you've decided on that, then you also be able to tell on your investment journey, where are you? If it's on the scale of say 1 to 10, where are you on your investment journey? Where do you want to be? So for my case, I haven't done bonds for quite a long period. I actually started last year, and I started with a 10-year bond. And at that time, I had these insurance agents come to me pitching how I should do insurance for my kids, for their education and the likes. So among the things that they were telling me for how the insurance policy works is that, it is like forced saving. If you commit to be paying 100,000 or 200,000, if it is monthly, then you have to keep up with that. So as weighing options that I had at the table then, that if, for example, you commit because, life is full of uncertainties. You can commit to be paying maybe 200,000 a month, and then 2 years later, you don't have the job, and yet you have already committed to this sure deal policy for 10 years. So what I opted for is that I realized that if I buy a bond of say 10 years, and then because, as Melissa had explained that with these bonds, they keep giving you interest 2 times in a year. That is the coupon interest. So that every time I get that coupon, it actually finances my sure deal policy that I signed up for 10 years. So every time the coupon comes, because the bond that I bought pays a coupon in November and May. So then I had to sign for a policy to make sure that if the coupon comes in November, then within 3-5 days, I transfer the money to my insurance policy. And in that way, I'm not getting new money to inject in the insurance policy, and it's the bond that is running that is paying for the insurance policy. So at the end of the 10 years, I'll be having my maturity of the bond, and then also be able to get the sum assured for my insurance policy. So that way, you don't feel the pinch of, you need to get money to put in, even if you lose the job, at least you're sure that you'll be able to attain your goal of the bond, and at the same time financing an insurance policy. So Susan, mainly that was my objective at the time, to invest in the bonds. Yes. And the key takeaways, if one is to invest in the bonds, really, the main thing that stands out with a bond investment is the safety of your savings, because you're sure that it is issued by the government of Uganda, and there is a predetermined interest or return that you're going to get throughout that period. So that for sure, is guaranteed. And if it is someone that is not into risks and you have this money that you want to put away for some time, it is locked up there, you don't easily access it for a longer period, then the bonds is a big deal. Thank you, Susan.
Wow, thank you so much, Penklin, for that. Yeah, indeed, those are strategies of investment. I hope we have all been able to catch that. Penklin is saying I invested in a bond because I also want to fund an insurance plan, and I'm using my coupons to be able to do that. And I thank you, Penklin, for really opening up. I hope people will not follow you to to say Penklin has a bullion van, so we should steal from her. Please, Penklin is protected. So Harriet, back to you. For someone that has already invested in stocks, Pinklin is, for her, she has already invested in bonds, but for someone who has invested in stocks or any other assets, why then should someone add bonds to their portfolio? Why do you think that should happen?
Thank you, Susan, for that. First of all, I could say it is always good to diversify your investment. If you have shares or any other asset like real estate, I would advise you also put some money into bonds investment. because bonds, they provide stable and predictable return through coupon payments. If you buy a bond or if you buy bonds, you are assured of the semi-annual coupon payments. You get your interest semi-annual 2 times a year. We have on the bonds market, you have so many different bonds with different interest rates. There are short-term bonds, which is the 2-year, which is a short-term that pays 14.125%. There is a 3-year bond that pays 15.55%, a 5-year bond that pays 15.55%. Then there are long-term bonds like a 10-year bond that pays 16.25%, a 20-year that pays 17%, one that pays 15%. There's a 25-year that pays 16%, and so on. So if you buy such bonds, you are assured of your semi-annual coupon payment. Then also, if you are that client who wants to earn monthly interest, you can structure your investment in 2 different bonds. We have bonds that pay Jan and July. We have bonds that pay February and August. We have bonds that pay March and September. We have bonds that pay April and October, and those that pay June and December. So if you invest like in 6 bonds, that means you'll be getting your 12 coupon payments in a year. That means in every month, you'll be getting a coupon payment. So also, bonds can help you plan for the future, especially for the goals that require certainty, like school fees or retirement. For example, if you have a child and you want to save for university, you can invest in a long-term bond like 15-year bond, a 20-year bond, a 25-year bond, and keep on reinvesting your coupons over time. In like 15 years, you'll be having a lot of money to cater for your child's university fees. Or if you're looking to meeting your expenses like school fees, medical bills, or other personal needs, coupon payments, I'm sure, can help you cater for that as you're protecting your capital, as you're doing other investments. Let these coupon payments help you cater for those expenses. Then if you're someone who is looking at building a house, I normally advise my clients. There was a time a client came to me, the money wasn't enough and he wanted to get a loan. But then I advised that client to invest in a 20-year bond that was paying 18.5%. And that bond is really doing well on the bonds market. Right now, that bond is trading at 113%. So I advised the client to buy that bond for 3 years, as is reinvesting his coupons. In the 3 years, the client was able to raise the money that helped him to build a house. So instead of going for a loan that will bring pressure when you're paying back the interest, you can buy a bond, reinvest your coupons till when you get that money, and then you build the house that you want. So bonds can help you to cater for that, to avoid pressures from banks as you're paying the loans. So I could say it's not about choosing between stocks, bonds, or real estate. It's about creating or combining your investment to create a more balanced and resilient investment portfolio. Help you cater for your financial goals, your everyday needs. Thank you so much.
Thank you, Harriet. So back to you, Melissa. Melissa, are you able to unmute your mic? Are you able to?
Yes, Susan.
Okay. So for Melissa, we know that many people here are also first-time investors, and they are looking to, they don't want to lose their money. No one sets out in the morning to go and invest their money and lose it. And so how do bonds protect someone how do bonds protect someone, an investor, when markets are not doing well? Then also, are there instances where the issuer, that is in this case, which would be government of Uganda, would default? And then also in that regard, how can investors protect themselves from that risk? Yeah.
Oh, thank you so much, Susan. Now, that's a very valid question. We've seen many clients come in and say, will I lose my money if I put it away for maybe 20 years? If I, what is the risk Many first-time investors are usually nervous about losing their money, and that's valid. However, bonds are really usually mostly considered a safer option, and they're considered safe because most people invest in bonds for the purpose of capital preservation. So you're putting away money because maybe you have thought that in 20 years my child will be graduating from university, or maybe they'll be going into the university. So it's mostly for the purpose of capital preservation. And also, in uncertain markets, you will find that bonds actually perform much better. You'll see that when the market is a little bit risky, or maybe interests are all over the place, people want to put money where it is safe. You'll find that maybe people will not be purchasing shares when prices are going up and down. People want something that is more predictable, or something that will assure them of money coming in. Because if the market is uncertain, you want to know that if I have invested for 5 years, every 6 months in January and July, I'm able to get this amount of money. And also another thing that a first-time investor should be certain about is that the beauty of investing in bonds is that you know exactly what you're getting back. If you've put 50 million, you know that my coupon is going to be this much. You know that I'm going to get this money in January and July, or maybe in May and November. You know when the money comes, you know how much of it is coming. You're even able to plan further ahead to know that if I am receiving 2 million every 6 months, I have my children who go to school between maybe Jan or maybe May. I can use this money for their school fees. So if you're an investor, first-time investor, and you're anxious about losing your money, bonds are really considered safe because they have the advantage of giving you a regular cash flow. So even when the market is all over the place, you know that there's some money coming through from this bond, regardless of how much you've invested, regardless of what time it is, you know exactly how much you're going to get it. So also the fact that here in Uganda, we've really had a low default risk from our government. I will not say that it's not a possibility, because yes, bonds are considered to be safe, but they're not entirely risk-free. There's a default risk, the possibility that maybe the government is unable to pay the coupons at the time that they're supposed to, or maybe at the end of the period, or maybe your money has matured and you're unable to get it back exactly how you anticipated it. So that is, I think, the other question that Susan was asking to do about what happens if the issuer defaults, and how the investors can protect themselves from such risks. So basically what happens if the issuer defaults is that maybe the issuer can postpone some payments. You could find that maybe you had a coupon that was coming out in Feb, and because of a default risk, this payment has been pushed to the next month. So in your mind, you knew that this money is coming back in Feb, but unfortunately, you may not be able to get it in February. You're going to get it in March or maybe April, depending on when the issuer communicates. You find that maybe the interest rate could be reduced slightly, or say, just so that they're able to cover that risk. Or you find maturity dates extended, scenarios where you had a bond and it was maturing, say next year, and the issuer is unable to pay this bond. They could extend the maturity just slightly so that they're able to cover up whatever amount of money that they needed, or whatever debt that the country is going through. We've also seen cases, we have what we call bond conversions, whereby the bank issues out, the government will issue out a bond through the Bank of Uganda. And for clients whose bonds are maturing, say you have a bond maturing in August 2026, yeah, what the Bank of Uganda will do is it will offer interest rates, more attractive interest rates for that particular investor to maybe push, or reinvest that bond for a longer period. Maybe you had a 2-year bond and it was maturing in July 26. So what will happen? Bank of Uganda will do a bond conversion whereby they will have, they'll do different bonds
do attractive interest rates. Maybe you want to invest for 5 years, the coupon is 15.5, and they'll say, okay, we're going to give you an interest rate of 16.5% to encourage investors to hold on to that money a little bit longer. So those are some of the ways that default risks can also be managed. But now you as an investor, how can you protect yourself from such risks? What normally we can advise is that you diversify as much as possible. What does diversifying mean? There are so many, like I mentioned, we have bonds of 2 years, 3, 5, 10, 15, 25. You can buy as many bonds as you wish, because remember, every month there's a bond. We also have mentioned that if you don't buy the bond on the primary auction, you can buy it on the secondary market. So you can buy as many bonds as you can. Buy the 2-year bond, buy a 20-year bond, buy as many bonds as you can. Ladder your bonds to reduce on that risk. In addition to that, you can also monitor the performance of your bonds. We, as the brokerage firms, Crested Capital, Old Mutual, Dan Blair, as well as the Uganda Securities Exchange, are in a position to advise you on how the market is really functioning with regards to the bond market. So just do as much as you can to monitor the performance of bonds, see how the interest rates are changing, see, when the financial calendars come out, see what kind of bonds have been, introduced. Pay attention to the budget, because sometimes the budget reading also helps us to determine the direction that the interest rates may be going. And then another thing maybe we can advise is that you can do the shorter duration bonds. When you do the shorter duration bonds, the maturities come a little bit quicker. So for example, if you're anxious about maybe government changes, because most of these default risks come from a fact that, people become anxious of the fact that now if the government changes, what is going to happen? So what you can do shorter duration bonds. We know that usually there's a 5-year period, between when governments change. You can do a 3-year bond if you want to be more certain of avoiding any default risks. Of course, we've seen some debt default in a few countries, maybe Argentina and Greece, but here in Uganda, personally, we have not seen that. But in the event that it is to happen, those are some of the things that the investor can do to protect themselves. Thank you, Susan.
Thank you so much, Melissa. Indeed, even in the chat section, someone was saying that when the governments change, maybe the assurance we also want to give you is that the money that you lend it to a government and not necessarily a political party. And sometimes when people are asking that question, it's because they are really looking at the political parties. But if NRM is no longer in power anymore, does that mean they will not pay me? No, the debt is specifically where the government, these are technocrats that are representing whatever government, whatever party that will come in power and will be serving. So definitely, it's just to ensure that the new government that comes in place and the ones that is the new president, new ministers, they are all able to run the economy efficiently. So the debt still remains. This is sovereign debt. And one of the biggest risks, of course, as Melissa has just mentioned, is sovereign risk, the ability for the government not to pay. And this is not specifically a party, but more or less, the whole institute of government as it stands. So thank you so much, Melissa, on shedding that light. I know it's a question that has been in people's minds. I'm giving my money for 10 years, for 15 years, but yet I do not know how the performance of these bonds and how the government is performing and how I'm able to ensure that I am safe and my money is safe. So I want to go into the more practical questions, isn't it? Like practically, people are here, they have heard us talking about what bonds are, the risks that are inherent for us, but they want to know practically, how do we get plugged in? How do we get plugged in? How do I start? And I'll hand over to you, Harriet. First of all, I do not have a lot of money. One of the questions in the game was, what is the minimum amount of money to start with, isn't it? So people want to know this this morning. What is the minimum that I need to be able to start investing? And is it something that ordinary Ugandan can be able to afford for all of us? Yeah, Harriet.
Thank you, Susan. We know that one thing about bonds is that they can be accessed by the ordinary Ugandans. In Uganda, you can start investing in bonds with little money, like 100,000. You don't need a lot of money to start buying government bonds. With just 100,000, you can do that. Though the return on the 100,000 may be little, one thing I would advise an ordinary Ugandan is to start small and stay consistent. You just need to keep on adding on your investment by topping up. You can either buy that same bond in the secondary market, or you can either buy it through the primary market if that bond is still being auctioned by Bank of Uganda. So bonds are really affordable, and our bonds market gives opportunity to everyone to grow their money. Thank you.
Thank you too. So indeed, 100,000 is what we are required to start with. But also Harriet is communicating there that, by the way, it's 100,000, but that 100,000 cannot be 100,000 forever. You have to make sure that at least you're more consistent with your 100,000 so that the portfolio can grow a little bit bigger. One thing that we have realized with clients is that sometimes when they get frustrated with this particular investment is that they put their one-time money, 100K, and yeah, they're earning 16% on a particular bond, but they're saying, the money is very little because 16% is about 16,000 a year. So if we are going to be those investors that are really committing that minimum, then we should be able to be more consistent. And like the panelists have shared, that you can be able to do this on a weekly basis, even on a daily, if you do have the money, and that can be done through the secondary market. Penguin. So people do not know a lot about finance. Some people here are doctors, other people are business people. They are downtown, they're making sure that they get those goods and merchandise in. Some people are in a totally different sector, like say maybe they are in NGO work, and really they don't know a lot about finance. But then yet they want to make these investments because these investments are very critical for their future. So how does someone know that this is a good bond to buy before they commit their money?
Thank you, Susan. So before an investor commits their money, it may not only be for bonds, but for any investment. One needs to first assess their investment needs. What is it that they are looking for? And for how long? For example, if you speak about bonds, we've said that there are bonds of different tenors from 2 years to 25 years. So for how long do you want to fix your money in a bond? Is it a 5-year bond? Is it a 10-year bond? Is it a 3-year bond? Then after you've assessed the time that you want to invest in, then also understand if there are any, understand the interest rates for those particular bonds, because the shorter the investment period, the lower the interest, and the longer the period, the higher the interest rate. Then also understand that there are tax implications. Bonds are taxed, so you need to know that for bonds that are 5 years and below, withholding tax is 20%, and the bonds that are above 10 years, withholding tax is 10%. So after you have assessed the product, that's the bond, its benefits, and then also the tax implications, then one is able to decide on which bond they are going for. And then also, before you commit to it, after you've assessed the period, if, for example, you've decided to go for a 10-year bond, these bonds, the beauty with them is that they are tradable. You don't have to wait until the 10 years and then you can sell. After you've selected, say, a 10-year bond and you've got it at maybe 15.7%. So then be on the lookout, be invested in what you're investing in, get to know how the interest rates are moving. If the interest rates go lower than what you had actually bought at and you're making capital appreciation there, you don't have to wait until the 10 years are done. You can sell off that bond, get your profit, because at the end of the day, you have been getting the coupons that come in twice a year. And then also their advisors. There's Old Mitchell, Crested, Dan Blair. We shall be able to advise you on when you can actually buy more bonds or even sell them. So we are here to handhold you, advise you on which bond you can buy, when you can buy it, depending on the needs. It's not the same for all clients. So depending on the client needs, we're able to advise on which bond you can buy, when you can buy it, and when you can sell. Thank you, Susan.
Thank you so much, Pecklin, indeed. Yes, that you need to have an advisor. That is what Pecklin is emphasizing. And the advisors are here. Pecklin, Melissa, and Harriet will be able to advise. They do that work. They even are able to share valuations before you make that particular investment. And yes, look at someone has just commented, that is Quantella Resources, that will the withholding tax below 10 years is 20%, and they're saying it's way too much than the expected profit. 20% is 0.2 actually of the interest that you're earning. So it is compared to the 10 years and above, it's the other one is 10 years. So if you feel like 20% is way too much, then it's very good that you'll go for bonds that are above 10 years to be able to get a 10% tax. But then also you'll find that people don't necessarily also just invest in longer term bonds. Remember, they're also looking at the timeline. So the timeline of your maturity does really matter, especially when you are deploying the money. So if you say that I really need the money in 5 years, that means you'll be able to put in for a 5 year, and then you'll have to be subject to that particular tax. But then now Pecklin has also given you a solution that, by the way, yes, if you want to also avoid that extra 10% of tax, then yes, take out maybe a 10-year bond, and in 5 years, be able to sell it out. After all, you'd have already earned the coupons over time for the past 5 years. Sell it out and get the money and use it for what you actually originally planned. So Melissa, back to you. So I have seen already comments of people that are saying we want to know how we are able to buy these bonds through the Uganda Securities Exchange. There are even people who are saying, actually, I've seen a comment in one of webinar questions that is from Humphrey Cobell, that saying that we don't want to visit physical offices. We just want to do everything online seamlessly. So I want you to take our guests to this morning on a step-by-step. How do I buy a bond through the Uganda Securities Exchange? And I want you to break it down for them for the primary market and also for the secondary market. How are they able to do that without necessarily coming to the OMIG offices, their offices, or Crested Capital offices? How are they able to do that? Over to you, Melissa.
Yes, thank you, Susan. Now, for those who are interested in purchasing bonds, I could say we have two ways that you're able to do this. I know that the Humphrey said, without having to come to the office. So if it's without having to come to the office, for starters, I believe most of us, or maybe if you don't have one, through the Uganda Securities Exchange, the brokers who are Crested Capital, Old Mutual, and Dan Blair are licensed to, purchase the treasury bills or treasury bonds on your behalf. So if you are already tied to a broker, normally we are able to accept even email instructions. So if you as a client do not want to appear at our offices, you can simply send an email. I believe our emails will be maybe written down in the chat so that you can access us. So you're able to send an email to us, and then you let us know exactly what you would like to do. Maybe you want to purchase a bond, and then we'll be able to take you through the process of which bond maybe could be suitable for you based on your needs. And then you let us know how much money you would like to invest. As Susan said, we do valuations for you so that you know exactly how much you're going to be receiving in terms of interest, and even at the end of the lifetime of the bond, how much you would be receiving. So basically, we take you through what the bond is, how much you can invest, what tax will be removed off of your interest, and we also give you details for payment, because most of us have, banks that we are tied to. So we give you the details for payment so that you're able to make the payment for your bond. And we also let you know, for example, if you want to do the primary market, we let you know when the bond would be so that you prepare early. We do have clients who come in and say, I specifically want a 20-year bond, but that 20-year bond is going to be auctioned in April and not March. So they can even prepare themselves beforehand. They put their money aside and come and invest in April. Now, for those clients who are interested in purchasing on the secondary market, basically the secondary market you're able to purchase or to purchase these bonds even daily if you have the money. So if you want a bond that is off the market, you can buy it. If you want a bond that's, on the financial calendar, you're able to purchase it. The same method works. You can still send us an email. Let us know which bond in particular, because now there it means that you're more specific with the bond you want. You let us know which bond in particular you would like to purchase, and you give us also the proof of payment. And then we guide you with valuation so that we can see if that bond is perhaps the right fit for you. Then the other way that this can be done through the Uganda Securities Exchange, we have the USE Easy Portal. So if you are already a shareholder and you are linked to any one of us, you are able to have your USE Easy Portal account. And when you get on there, you'll be able to access, you'll be able to see apply for a bond on there, like the moment you log in. And when you click those options, you'll see all the drop downs and the particular bonds that will be on the primary market, so that you're able to then deposit your money through the USE, and that message will be sent to us as your broker, and we'll be able to purchase for you. So the ways are, you can go through the Uganda Securities Exchange Easy Portal to purchase your bond, or you can use an email for, send any one of us an email so that we can purchase for you the bond. Or if you are interested, you can always walk into our offices, so that we can have a full length discussion with you, and we can physically show you how what the valuations look like, and take you through the process step by step. I hope that makes sense.
Yes, thank you so much. Indeed, yeah. Especially for the digital clients, they would really want to use the Uganda Securities Exchange portal. I believe Penklin and Harriet and Melissa can testify that they are clients that they have been advising for all these years, and they are making deployments for them, but they have never seen them face to face physically. Yeah, they do not know them. People have been able to open their accounts using the Easy portal or using the USSD code to be able to get their SCD account, because you need a depository account, a securities exchange. It's called a Securities Central Depository Account, SCD, where all those assets are kept. So they keep both for the shares and the government securities. So you're able to do that through the Uganda Securities Exchange portal. And then you can continue other conversations in regards to now what investment, as Melissa has shared, by liaising with them on email, and then be able to make the application through the system. So it's very possible, and definitely we are looking forward to ensuring that you start your journey. You really don't have to. We will be at the tail end of this session. We will be posting the contacts for these ladies, these amazing ladies, so that you can be able to reach out to them personally. So as we go to our last round of just questions before we go into the Q&A, we already have over 30 questions that have been posted in the group. And so we want to ensure that we respond to some of them, because of course we also have time is against us. But from Ola, just maybe from Pinklin, what do you think is the biggest myth about bonds that is stopping everyday Ugandans from investing? And what is the truth? There are certain myths that people have believed about bonds, but yet they are not true. And we want to debunk these myths. And I'm sure as you're answering this question, you're also going to be answering some of the questions that actually already that we are receiving, because I also see that these are some of myth questions that we have. Penguin.
Thank you, Susan. One of the common myths is that because the public knows that bonds are long term, so they think if you buy a 10-year bond, you have to hold it until the 10 years are done. That's not true. Bonds are tradable, and you can sell it anytime, provided the interest rates are in your favor. If you bought the bond, say at 15.5, and interest rates go to as low as 13, you can sell that bond, and you'll be able to recoup what you put in and more, plus the coupon that you've been earning over time. Yes, then the other myth about the bonds investment is that they're for big people. You need to put in, when you need to invest in bonds when you have a lot of money. No, you can start as low as 100,000 and be able to get a return, provided you're consistent at growing your portfolio. Thank you, Susan.
Yeah, definitely. Maybe quickly, Pinklin, is it possible for people that are living abroad to be able to access bonds?
Yes,
Mhm.
people that are living abroad, it's possible and easy for them to invest in bonds because the account opening process and the allocation process is all done online, provided you set up your Uganda Securities Exchange SCD account with any of us, the brokers, you'll be able to transact seamlessly, transfer funds, and the bonds will be bought and settled within your account. Then there's a transparency that you can easily monitor your bonds investments on the Uganda Securities Exchange Easy Portal. Yeah, so it's possible.
Yes. Angela also has a myth saying she has written out a statement saying that is in the 100K for T-bills. I think we need to make it clear. What is the 100K for the minimum? Just to make it clear for Angela.
100,000 is the minimum for both treasury bills and treasury bonds.
Yeah, exactly. So Angela, that one we have debunked it for you. Yes, 100,000 is where the government is saying that, you know what, both for bills and bonds, you can all start at 100,000. Yeah, so maybe just as we close off our panel before we get into the questions that our guests have, what is the one thing that you'd want people to do tomorrow to start their bond investment journey? Harriet, what would you want people today that have listened in, over 130 people that have listened in this morning, what would you want them to do so they can be able to start their investment journey?
Thank you, Sylvain. As shared by Neds, tomorrow morning, the first step the listener should do is to open what you call the securities central deposit account with a licensed broker like Dan there, Crescent Capital or Mutual. We handle government bonds. So you need to open that account. If you have that account already, you can start small. You just need 100,000 to buy your first bond. You start small, then you start doing your investment over time. So maybe one advice I could say, it's always important. You need to be financially disciplined. You need to be focused and consistent. Without that, there's no way you can grow your investment. There's no way you can grow your wealth. Through being financially disciplined, focused, and consistent, they are able to benefit from government bonds. Starting small and keeping on topping up your bonds. Thank you.
Thank you too. Thank you too so much, Harriet. So that's what we had from our panelists. But now we have some questions that have been shared by the guests, and the guests are asking Melissa to you that what advantages does one have of having the primary market over the secondary market? Are there advantages, Melissa? What advantages can someone experience from the primary market over the secondary?
Okay, thank you, Susan. So from experience, what we have seen or how the primary market works, how it works differently from the secondary market is maybe the difference in the interest rate. So we'll find that maybe a client wanted to purchase a 25-year bond that was auctioned yesterday. So that 25-year bond from the primary market was auctioned at 16 point, I think, 25%. So now if that bond has been auctioned at 16.25% on the primary market, but somebody missed out on that particular bond and they would like to purchase it on the secondary market, chances are that you'll buy it probably at an interest rate just slightly lower than what the primary market or what the Bank of Uganda will have given. So if it was 16.25%, you find that maybe it's at 16.2%. Yeah. If you're buying it on the secondary market, the rate will not be the same. So usually that's one of the differences, or that's one of the things clients look at and say, but the bank is going to take my money. I want it at 16.25, but they're going to give it to me at maybe 16%. So that's one of the few things that we know as a difference. Also, we can say that the secondary market it does not necessarily mean that the rates on the secondary market are always low. You may find that maybe there's a particular bond you wanted to purchase that's off market, right? Maybe you wanted to purchase a 5-year bond, and this maybe it has a maturity date of 2029 and it's currently not on the market. You find that if you were to purchase it on the secondary market currently, let's assume they would give it to you at a rate of, say, 15%. You find that a person who bought it during the financial market, sorry, who bought it during the primary market auctions was getting it at a rate lower than that. So it doesn't necessarily mean that the secondary market is always going to give you rates that are lower than the primary market. Sometimes it also has a lot to do with timing, or maybe when you have purchased that bond. Maybe you're purchasing it at a time when that said bond is doing much better in terms of, interest rate growth. But in layman terms, if you purchase a bond on the primary market, chances are you're going to get it at a rate just slightly better than you would if you bought it through the banks.
Maybe also just to add on to what Melissa has said, currently we are in a falling market, rates are falling. Someone did mention about it. One of the participants says now the rates are going slow and we are going low, so we do not like it. I think it was, I can't quickly go through the names, but I think it was someone, I just saw it as a comment, and they don't appreciate it. And yet we find now in a falling market. For example, if you bought your 15-year bond last month at about the other month at 16.4. Yesterday it came out at 15.7. So you find that on the secondary market, the Penklins and Melissa were able to get people to they were able to buy for people at rates of 16, 16.2, 16.3. So anyone who said, I'm waiting for the primary auction to buy, I mean, you lost out, because the whole month of Feb, March, at the beginning, we have been trading that particular bond has been trading on the secondary market at 16.3. So for you to come and get it at auction at 15.75 as of yesterday, what the results brought, that means you'll have missed out. So in a falling market, the secondary market is really a very, very good market. And then someone, I think it is Conrad, that just asked, Melissa, how liquid is the secondary market? If I have an emergency, can I easily liquidate my position fast enough to cater for that emergency? As a follow-up to what you just shared.
Yes. So we have seen from experience clients urgently needing money, and we've been able to, liquidate their bonds as soon as quickly. I did see a question. Someone is saying, can I liquidate within hours, or something to do with that? So if we are in a position to agree on the rate that we have been given with our client, yes, it can be done. You can liquidate. Of course, we know we have to go through settlement timelines and whatnot. But in terms of the bond itself being sold, it can be sold even on the same day. You can send the email in the morning and that bond would be sold that day.
Yeah, thank you so much. Yeah, so they're saying if you give your instructions and you agree to the rate, by evening we shall have the money, yeah, when we are able to pay you. Penklin, Winnie is asking, need a bit of clarity. Can I top up a bond regularly? If yes, how often and how do I know that the bond is still open for top up? So she wants clarity, that is it possible to top up on a bond that probably she has in her portfolio already? Is it possible?
Thank you, Winnie, for the question. Yeah, so it's possible to do a top up of a bond anytime, and to know that it's open, provided it's still running, or provided it's before its maturity date. For example, if the bond matures on the 1st of August 2030, anytime between now to 1st August 2030, you can be able to top up on that particular bond, provided it doesn't get matured. Yeah.
Okay. Then John Sekaja is asking that he has heard about bond laddering, and I'm sure he's also already bond laddering, because he's saying he wants bonds with coupons of March, September. Can you get him one? He's looking for this stock. Can you be able to get it for him, Penklin?
Yes, we can. March, September is 2042 paper.
Yes,
that was issued in 2022. It's a 20-year bond. It has a coupon of 18.5%. Yes, we can get it. Though with the interest rates dropping, one would be getting it at quite a price compared to when it was issued, or even last year when the rates were high.
Yeah. Yes, and Conrad is asking, and this is really for us to clear this up for him. Are brokers also allowed to buy bonds for customers, or is it just banks that are allowed? And I think that is the reason why we are having this session to debunk some of these things. So, Penklin, are we impersonating, or are we allowed to do this for them?
Thank you, Susan. There is no impersonation. Yeah, brokers are allowed to do the buying and selling of bonds for the public through the Uganda Securities Exchange. Initially, bonds were trading through the commercial banks with the Bank of Uganda, but there's been an initiative by the Uganda Securities Exchange to have the bonds and treasury bills also extended on the Uganda Securities Exchange market, and the brokers are permitted to do the buying and selling of shares and bonds, provided you have an SCD account, and that SCD account will be able to settle the bonds and the shares as well. Thank you.
Thank you so much. So, Conrad and everyone else, yes, we have the mandate to do this. So, just walk into any broker office. I'm going to share with you the contacts of these three amazing women so that you'll also reach out to them so that you can be able to start your journey. And also, maybe to also add is that the same rate as at auction is the same rate that you're going to get. And maybe also this will be speaking into Charity Eseno, who has asked, can you kindly clarify what the primary market is and secondary market is? And just to reiterate what Melissa shared, primary market is when we are buying directly from the Bank of Uganda, that is at an auction. And for bonds, it happens once a month. For treasury bills, it happens every 2 weeks. Secondary market just means that, Charity, you missed out on the auction. Your money was not able to come in time. For example, usually we make submissions by Tuesday evening. We're already submitting for the auction. So if you missed that submission, the auction was yesterday, you missed out. Today, Charity, if you have your money and you want to buy the bond, it is possible, and we shall do it on the secondary market. Secondary market, we are basically saying we are buying it from existing holders, people that actually hold that bond, who are willing to sell to you, is the people that we are going to buy from, and not necessarily directly from the Bank of Uganda. Is it a different security? No, it's the same. It's just that someone else is holding it, and they're saying, me, I'm passing ownership to another person, and it still will be the government of Uganda that is going to make the interest payments to you. And there's been questions about charges. Do brokers charge? Is there a charge for this service? Yes, there is a charge for this service. I mean, we have to keep the lights on. So the different brokers have different charges. And so you'll be able to reach out to them and they'll be able to explain. And these charges are not expensive at all. They are really manageable and they can be paid, and they will be able to support you. So all the brokers are here to support you, to be able to get you on this investment journey. So are there charges for advisory services? They don't charge you for advice. Advice, they give it to you, but they charge for when you make a transaction. So the moment you place a transaction with the brokers, they'll be able to what? Charge you. But for advice, when you're trying to get to know and understand, they do not charge any advisory for any advisory services. So I think largely those are some of the questions. And what we are going to do as the Uganda Securities Exchange, we are also going to respond back to these questions. And since we were all on an email trail, we're going to send back responses to these questions so that people will have them and continue to go back to them. But largely we have answered most of them. And maybe Jimmy Alinga is asking, can a bond be used as collateral for a loan? Yes, your bond can be used as collateral for a loan. In fact, these ones are now the most sought after assets in regards to backing up loans as collateral. So the moment you have a bond, yeah, the bank can be able to extend credit, or any other person can be able to extend credit to you. You just need to fill out paperwork. For a bank, even they would want to ensure that the cash flows are coming to them, so that in the event that you're not able to pay, they know that they have the coupon payments to be able to cater in the event of default. Yes. So Conrad is asking about premium on bond discount, simplest language possible. Now, Conrad, I must say that this will not be the session, but we're going to have a follow-on session where we're going to specifically talk about pricing of bonds. We did not want to confuse you, our guests. We wanted to ensure that this was the first session where we are really understanding what these securities are. But then the next sessions that we're going to have are going to be specifically on pricing, where our panelists are going to come back and actually teach you what bond pricing is. So it is 11, it's 18 minutes past 11. We really don't want to take it past 11:30. And right about now, I just want you using the emojis, the reactions, to just clap for our panelists and thank them for responding to the questions, to ensuring that they were here for this session. So a thumbs up for them, and I'll be posting their contacts shortly. Right about now, I would want to invite Sarah. Sarah is from the Uganda Securities Exchange Academy. And this is an academy, like I told you, that is in charge of our learning and our public education as the Uganda Securities Exchange. And so, Sarah, I would invite you to unmute your mic, speak to our people about what USE Academy is and what learning opportunities are there for them.
Thank you so much, Susan, for being a very lovely moderator. Thank you, our panelists. You've really done the discussion justice. So I appreciate you on behalf of the USE Academy. A little bit about the USE Academy to our participants on today's learning. The USE Academy is the capacity building arm of the Uganda Securities Exchange, with its core objectives of educating the general public, stakeholders, who include the investors like you, and the entire ecosystem in the capital markets. So our objective is to educate the masses, offer as much knowledge as possible to the public. The USE Academy is moving into its third year, and over the 3 years, we have been able to train people in master classes. Oh, okay. Over 100 people participating in our master classes. Over 6,000 students from secondary schools obtaining learning from us, or from over 12 schools. Those are secondary schools. We have been able to reach over 5K attendees through the webinars and X spaces. We have been able to reach 62 companies participating in our trainings and courses and education services that we move and bring to them. We have partners as we impart knowledge. We have partners to work with to be able to reach out. We include the CMA, Capital Markets Authority, the Certified Institute of Securities and Investments, Makerere University, Nairobi Securities Exchange, and the Institute of Bankers. The USE Academy has upcoming trainings that are on schedule. As you may see, you may be able to view on your screen is a calendar. So the upcoming trainings are displayed. So to make it easy for you to book your training or whichever course you're interested in. But for the soonest that are coming, ESG disclosures and sustainability integration. This is a masterclass that is scheduled for 23rd to 24th April. It's happening here in Uganda, but there's also one scheduled to happen in Johannesburg, which you could also tap into. But we also have other courses besides the ESG courses that are upcoming for next month. We have other courses that include investment management. That is also a masterclass. It's for the professionals. We also have introduction to capital markets. We have the bond market and we have the commodities market. Our learning pathways as the USC Academy include public education, just like the one we are extending right now. We have courses at entry level. We have professional trainings. We have sector tailored programs. We have board level courses. We have executive programs, and we have then these online webinars and expenses that we arrange regularly. Our public education is offered to any members of the public that may show interest, the ones that we reach out and pitch and they show interest, which include smaller businesses, organizations, academic institutions, SACCOs, among others. So like I said, the USC Academy is geared towards imparting knowledge at all levels in the capital market spaces. Any of you who may be interested in attaining knowledge through the academy, the USC Academy, you could visit our website, the Uganda Securities Exchange website, which is www.use.or.ug. And under about USE, there is a drop down which includes the USC Academy. When you click that drop down for the USC Academy, you'll be able to access our services right away, or even send an email to training@use.or.ug. We'll be able to book your course, you in for the course you're interested in, or even come to you for public education, which is pro bono, except if you need you need professional trainings that we could have discussions around the amounts to invest. But otherwise, from the USC Academy, we are happy to share knowledge. We are happy to educate. We are happy to have everyone learn so much more about the capital markets, about investments, and also continue to build investor confidence in the public and generally professionals in the capital market spaces. So we are available even on call. When you check our website, you will see our phone calls. But to give you, if you're able to note, is that you can reach us on 0312-370-818 or 817 or 815. Susan, unless you have anything else you need me to clarify or elaborate.
Clarification comes from Pantella Resources. She's asking that she has a child below 18 years, but the son is very interested in things like crypto, online trading. That is it possible for him to attend these courses if he's below 18 years?
Yes, like I mentioned earlier, We train secondary school students, primary school students. They come for tours, so they are open to learning, not crypto investments specifically, but the regulated investments that under the capital markets. Those ones we are able to share all the knowledge according to their level. We have information that is categorized to every level. Did I answer that rightly, Susan?
Thank you so much. Yes. I thought you had finished. Yeah, okay. So are you adding anything else?
No, I would only want to thank you again for logging on to today's webinar and giving us the opportunity to share knowledge. And from the USC Academy, thank you.
Okay, thank you so much, Sarah. Thank you so much, our guests, for coming, Sarah. But before we go, just to hear from Mr. Bob Musinguzi. He is our CSD manager. So this is the person that is in charge of the depository, so where all our assets are held. Just for him to give a vote of thanks and a few remarks. And in the next 2 minutes, we shall be able to log off and close. Over to you, Bob.
Thank you very much, Susan, and to the team that put this up. We really appreciate. To our wonderful speakers, Harriet, Penklin, and Melissa. We really believe, as Sarah had earlier said, we've done justice to the subject. But importantly, is to our wonderful audience, people who set aside a very serious, scarce resource, which is time to come and listen in. You are really a very wonderful audience. Thank you for the questions, for the clarifications that you thought. And we pray that this has been a value-adding session. I know I was seeing what I would call questions down the road that were also coming through. The commitment from us at the Uganda Securities Exchange is that this is a start and a continuation of many. We are here to empower you. We are here to educate you, but above all, support you as you make money. I think there is a common saying in the market where we say that as long as you have an educated investor, then they are an empowered investor, able one to participate in regulated and safe investments, but also able to make and earn money. Because ultimately that is the purpose for the market, is to make money, invest and earn money so that we can improve our lives. This call is beyond the market. It is a national call. And I believe as we look at our next development stage as a country, we are all trying to grow tenfold in whatever endeavors we are participating in. So we believe this is a space we think we are best placed to support and empower. So thank you to the team. Thanks to everyone who made time for this call. And we look forward to having you on our next engagements. And for any questions, comments, or even follow-up engagements, feel free to reach out to us, and we shall be ready to respond to you and support you in any way that we can. So with those few words, I believe Susan will be sharing both our contacts and the ones for our partners, the brokers. So really, with these few comments, I want to thank everybody and wish them a good day. I believe the Muslims have something coming up, so to wish them a happy one and thank them for the period they have been fasting. So I think we can call it a day. Thank you, Susan, and back to you.
Thank you so much, Bob, for those comments, and thank you so much, everyone, for coming on. I've posted John has posted information about the USE Academy, but I've also posted the contacts of our panelists. Please feel free to reach out to them. I'm sure they will be getting a floodgate of calls, but that is a good problem to have. So please do engage them. They are ready to answer even beyond what has been shared this morning. The next engagement will be also shared the same way we did this one through our social media, but also to all our depository clients. So everyone in the SCD was able to receive communication in regards to this training. So want this to be more frequent and more often. That's why we are dividing them in bits and sizes so that it will be very easy for our people to understand. So want to wish you a very awesome weekend because it's starting this today, as tomorrow will be a public holiday. So want to wish you and thank you really honestly for coming. Have a good day. Thank you.